So you're already thinking that taxes are already difficult, and now with coronavirus happening, how is filing taxes going to be different this year? Or you may be someone who's been filing taxes for many years, but what are some curveballs that might be happening this year? In this video, I'm going to tell you the 6 things that might be different in this tax return. Let's jump right into the video. What is going on? My name is Jung Ho, and welcome back to another video. And if this is your first time here and you want to learn more about personal finance, self-improvement, and any other tips that you should be aware of, start now by subscribing and clicking the bell so you don't miss anything. And make sure you watch until the end because that might help you to save hundreds of dollars in this year's tax season. And because this is something that's related to taxes, make sure you go back to your tax consultants or tax advisors and know the rules that might apply to your specific situation. And the purpose of this video is to educate you in terms of the new rules that might come out because of the COVID-19 pandemic. Back in March, the US government actually passed $2 trillion of relief package. This sent out stimulus checks to individuals who filed their taxes in 2018 and 2019. And this sent out around $1,200 for every adult and $500 for every child in their household. As an example, for a household with 2 adults and 2 children, that came out to around $3,400 for that household. Now the question for everyone is, do I get taxed in the stimulus checks? So the good news is that it will not be taxed. There goes the half the viewers that were watching just now. But basically what happens is that this is treated as a refund tax credit. So this will not be taxed at all. And so don't worry about that. But we want to go into the other forms of aid that came out of the CARES package that we do want to make sure that you know which of them are taxable. And unfortunately with the pandemic that had happened, a lot of people were laid off or furloughed in their careers and their jobs. And any type of unemployment insurance that you've gotten from the government are taxable. So many people in their state had the option of withholding that tax of around 10 to 15%. But if you didn't have that, or if you opted out of that, there are chances that you had to actually pay this tax in a quarterly basis, or you'll be paying these taxes in April of 2021. Now there goes the other half of you who are wondering about this. And so at this point, I should just probably end this video. But I'm going to continue on. Now let's say you actually didn't get the unemployment insurance, but you actually got PUA, which stands for Pandemic Unemployment Assistance. This is the same bucket as unemployment insurance, where if you were an independent contractor, freelancer, or self-employed, that this is a way for you to also get unemployment insurance. And PUA will also be taxed. So make sure if there's an option to withhold the tax, do so, so that you're able to kind of put that away. And if you are still collecting PUA or unemployment insurance, make sure you click on the option to withhold the tax. And this will help you to make sure that you have enough saved to pay for the taxes at the end. Another very common situation is working from home. Let's say you work in one state while you live in another state. You may owe taxes in 2 different states, especially if those 2 states do not have a reciprocity agreement where it prevents you from getting taxed twice. And if those 2 taxes that you live in and that you work in do not have that agreement, then in that case you actually owe tax to 2 different states, or multiple if you've been traveling and living in different states. Then in that situation, I would speak to a tax professional who will help you to guide you in your very specific situation. A very common question may be, hey, I actually worked in one place for one day. Would I have to pay taxes for that? And the answer to that is yes. And so I actually been, over the last couple of years, been working in New Jersey while living in New York. Because New Jersey and New York don't have reciprocity agreement, I actually owe taxes to both New York and New Jersey. If there's enough need or questions about this, I'll make a follow-up video that will dive deeper into this topic. A 4th common question that you might have is, can I deduct my home office expenses off my taxes? The answer to that lies in the fact that, are you an employee or are you a freelancer or independent contractor? If you're an employee, because of Tax Cuts and Jobs Act that was passed in 2017, you can't actually deduct any kind of business expenses related to your home Now let's say if you are a freelancer or a contractor, in that case you could use the home office deduction as long as it's used for business purposes only on a regular basis. And let's say you are an employee and still use the home office deduction, there is a higher likelihood you may get audited. As a disclaimer, a fifth common question that you may have is related to medical expenses. Let's say you or your family accumulated some medical expenses. Is that tax deductible? The main factor to this question is, are you taking the standard deduction or are you itemizing your deductions? Standard deduction means that you're taking the one size fits all. The standard deduction is something that a lot of people take, especially if they don't have a mortgage, interest to deduct, and other large deductions to make. And itemizing your deduction means that you are listing out every deduction that you might have that will add up to something larger than the standard deduction. And that will make the most sense for you to itemize. But if that doesn't hit, then you might as well take the standard. And the rule to that is taking the 7.5% of your adjusted gross income. That will be the amount that you are taxed on. Let's say your adjusted gross income is $50,000, then you want to multiply that number by 7%. And the total that you get is $3,750. If your medical expenses totals up to $5,000, then you will subtract the medical amount to the minimum that you're supposed to hit. And so you would do $5,000 minus the $3,750. In total, you will be able to deduct $1,250 added to the list of itemized deductions. The sixth common question that you might have is related to 401ks and retirement accounts. The CARES Act that I spoke about earlier allowed you to take out up to $100,000 out of the account without the early penalty fee. However, you do still have to pay on taxes on those accounts, especially if it's 401ks or traditional IRAs. By you taking that withdrawal out, this comes as a form of an income, which brings you up to a higher tax bracket. So you do want to be aware of where you are in the tax bracket and how much taxes you may pay if you do withdraw out of it. And let's say you did actually draw out of it, but you do want to put it back. This is actually great because the CARES Act actually gives you the option and the ability to bring that money back into your retirement account and get that money back for your taxes. And you do have a timeline of 3 years to do so. Now, seventh and last question that you might have is related to 529. Let's say you're an adult or a parent with the 529, and let's say you actually took out some money from your 529 to pay off some college expenses. And because of the coronavirus, and let's say either your college refunded some money, probably not, and because 529s are designed to be tax-free and without penalties if you use the funds to pay off your education costs. Let's say the cost either went down or got deferred, then any amount that you didn't use for qualified educational purposes or costs, then those will get taxed and penalized. And to avoid this, you do have 60 days after you withdrew it to put it back into the fund. And so if you already withdrew it and realize that you don't actually need that fund right now, then you have the option to put it back into the 60 days. I know taxes can be very confusing, especially without even having COVID in the equation. And now that it is, it will get much more complicated with different rules and different laws that you need to be aware of. Now that pretty much wraps up the video. Please let me know if this was helpful for you. And the question of the day is there one tip or tax situation that you weren't aware of before that you found most helpful in this video? And if you found this video helpful and you find that this could be helpful for your friends or your family members, make sure you share that with them. And if you found this content to be very helpful, make sure you hit that like button because this will help to push out the video to other people who may be wondering the same thing. And make sure you hit that subscribe button for any future videos like this. Besides that, thank you so much for watching. I'll see you next time. Peace.